Thank you.
Thank you very much, Karma. Your Excellency Prime Minister, ladies and gentlemen, very good to you all. It's such a unique experience for me, coming to Bhutan yesterday and then experiencing such a richness and beauty, but also a lot of respect for the globe, for humanity, for everyone. So it's a distinct, really pleasure and rare privilege to visit this beautiful, unique country, Bhutan. I also would like to acknowledge a very visionary moment this morning, JSW School opening the Climate Change and Environmental Law Department as well. And I also would like to say that we also have Tsagansar or Losar back at home in Mongolia. Yesterday we had the first day of what we call White Moon or Lunar New Year, and I'm very happy to see that also Losar is here, and also in Tibet and here, but I now work in Korea for Green Climate Fund, and headquarters of the GCF is in Korea. I know that the Lunar New Year was a month ago, but it seems that we have a lot of similarities and common traditions as well. I would like to congratulate Bhutan for being, I understand, one of only 2 countries in the world that is carbon neutral, or negative indeed, and of course established strong climate change credentials. The numbers I saw that Bhutan absorbs 3 times more CO2 emissions than it emits. So it's a huge gift to the world, but on the other hand, of course, we already see negative consequences of global climate change, and the previous speaker speaking about climate and climate justice is very, very pertinent. And I know Professor Adil, very beautiful, colorful, and powerful slide. Mine will be very modest. Maybe I'll go to my first slide. I would like to speak about climate finance. Of course, the session is about climate and philanthropy, and climate finance, global climate finance, which includes philanthropic finance, but also there is also multilateral finance. Of course, you are familiar with the World Bank, Asian Development Bank, sort of the development banks, but there are also multilateral finance institutions like Green Climate Fund, and it was created or set up, more or less we became operational just before Paris Agreement, and it is also about justice. It's about developed countries contributing to the fund, Green Climate Fund, that will be allocating, supporting finance in developing countries, both mitigation but also adaptation projects. Maybe the next slide. Or maybe I can use, maybe I can just ask about, moving. Not sure. I don't know whether the slide will, good, I think it works, no? Or maybe I'll just ask from here as a next slide. Next slide. So we're very proud to work with Bhutan and support climate projects together with our partners, WWF, Worldwide Fund for Nature, UNDP, but also Gross National Happiness Commission. Recently, Bhutan Trust for Environment have been accredited with GCF, and I really want to move the slides. The next one, right? Maybe the next slide. The next slide, yes. So I'll just briefly mention 2 projects that have been supported with GCF, and of course we're not the only financier, we're co-financed projects, and we work through our what's called accredited entities or partner agencies, and one of the projects on the right side of the slide is, of course, as you all are aware, Bhutan for Life is a major vision, major project of Bhutan, and we support out of 118 million. GCF has provided an investment of 20.6 million, and project is aimed at promoting nature and forest conservation to help the country remain carbon neutral. Bhutan for Life will also support adaptation measures to improve the resilience of rural Bhutanese communities threatened by the impact of climate change. We also approved another project, and that's more recently, and I think it's just being rolled out. And then if you can see on the left side, it's co-financed and undertaken, implemented by the UNDP, United Nations Development Programme. It's called Supporting Climate Resilience and Transformational Change in Agriculture Sector in Bhutan. It's to support and enhance the resilience of smallholder farms to rainfall variability, as well as increases in temperature and projected increases in monsoonal rainfall. Enhancing the resilience of the population engaged in agriculture, including the transition from reactive to climate-informed planning, is fundamental to meeting the government of Bhutan's, of course, aspirations on climate-resilient, low-carbon development. Again, out of 58 million, which is the total funding of the project, GCF has been providing 25 million. Again, it's just starting, and we look forward to seeing the implementation. The need, of course, everybody understands that the need for urgent climate action is more acute than ever, and nations must urgently transition from fossil fuels to prevent a catastrophic future on an overheated planet. So mitigation, very ambitious action is very important. At the same time, of course, adaptation action at the same time is as important. And as we've seen recently with the floods in Pakistan, vulnerable people, women and children are affected the most. So unfortunately, we've seen in the last few years, and when Professor Adil mentioned about 2020, of course we all know also pandemic started in 2020, and recently, also Russia's war on Ukraine, leading to higher prices for oil, energy and food, also higher transport prices, that's fueling consumer price inflation, and that's worldwide. Energy and agricultural commodity markets are volatile, so if you look at the finance, but also decision makers, the policies, it seems that there is an overwhelming number of crises and challenges that the globe is currently facing. But at the same time, climate change and climate crisis is a threat multiplier, so-called. We're talking about potential extinction. So this is the major risk that the world is facing and needs to be urgently addressed. And if we were to move from the pandemic to the what we call recovery, from the economic recession to the recovery, of course the best if that recovery is done in a smarter, and then we'll leapfrog to greener, cleaner and other investments rather than just subsidizing, promoting fossil fuel and sort of environmental biodegradation. We all know that this decade is now called the decade of nature and climate action, because we need to halve the emissions by 2030, it's very soon, and half again the decade after, and then reach net zero by 2050. At the same time, we have to reverse the biodiversity loss. And of course, these are really enormous tasks. But this can also be the disruptive decade with innovations, technologies. Imagine the scale of transformation that is needed. And that can offer huge opportunities, could also mean major opportunities that are forthcoming. Maybe with the next slide, you may have heard about the major momentum on net zero. With the next slide, you will probably see that now almost 150 countries across the world, equals to approximately 90% of the global economy and 80% of total emissions. Maybe we can go to the next slide. And the next slide. I think there were a couple of slides on, but I'm very happy to share the slides, of course, with the students. And the next slide. So there is a major momentum on one side being built. Initially started, of course, European countries, Japan, pledging. Then, for example, again, Republic of Korea, where based, pledged that it will become carbon neutral by 2050. China pledged that by 2060 they will become carbon neutral. Even India, everybody was expecting and criticizing how slow, by 2070 that they will become carbon neutral. And of course we're seeing definitely public support and pressure and demand, especially from the new generation. And of course private sector is becoming much more aware and started seeing that it's smarter and more competitive to go greener. But of course pledges are pledges. It's much more difficult to translate those into legislation, into concrete policies, roadmaps, and into concrete actions. And I used to be also legislator myself, member of parliament back home in Mongolia. And although it's not very easy to put a legislation together, I think it's easier than to implement, right? But having the foundational legislation, policies in place is, of course, the key. Now, key in the equation to transforming to this transition, what we call low carbon future, is actually finance. And we cannot, you've mentioned, of course, 100 billion. 100 billion was a promise during the Copenhagen that every year $100 billion will be raised by developed countries and allocated or moved to developing countries for greener, cleaner investments. It has not reached that volume, but by next year, you will hear that this 100 billion a year is reached, but even 100 billion is not enough. Because when you hear about 100 billion, it sounds a lot, but then it includes every development, climate, and other finance. For example, again, World Bank, multilateral development banks. You will have bilateral collaboration. You have private sector investing in developing countries, and multilateral funds like GCF. If you put everything together, it's about, currently I think it's reaching 85 billion. It may reach 100 billion, but if you divide it in 150 plus developing countries, the needs for greener, cleaner investment, this is not by far enough at all. So let me just give you just some numbers. The needs estimated, again, it was IPCC Intergovernmental Panel on Climate Change estimated, and maybe the next slide, the finance needed globally in new climate investments to limit the global warming below 1.5 degrees is 1.6 to 3.8 trillion annually. So you have 100 billion, and you have needs. There are some, estimates that the transition will require 4 to 5 trillion. And of course, when this 4 to 5 trillion speaks about the whole global investment needs, not only developing country needs, but the additional 140, 300 billion is needed annually to adapt to impacts of climate change. Now, you will also hear that the needs, the annual needs is in trillions. There is an institute called Climate Policy Institute. They do every 2 years. They estimate the climate finance globally. The most recent calculations are about 600 to 650 billion annually is invested in climate finance. But then 3/4, maybe the next slide, the 3/4 of that climate, of the 600 billion is actually deployed in the same country in which they're sourced, basically mostly in developed countries and well-off countries. Now, so what needs to be done? So the challenge is overwhelming. The needs for climate finances are also overwhelming. The previous slide, maybe. And the previous. Okay. Maybe we can. Yeah, maybe we can go to the next slide and next slide. So you see the climate financing gap. It's a huge sort of gap. And then I'll speak about one paradox. On one side, there are a lot of savings, what's called negative yielding debt in OECD or developed countries, right? OECD or developed countries, basically. There were some estimates, for example, that in 2021, 18 trillion of negative yielding debt and basically savings is sitting in those countries. But on the other hand, when I say negative yielding, basically it's no interest or low interest. It's not making any sort of interest, right? On the other hand, major opportunities for low carbon and climate resilient infrastructure investment opportunities in developing countries that can deliver returns between 4 to 8%. And of course, we all know that it's not very one would have thought simply that the investment will flow from one to another in search of higher yields to climate-friendly projects, where it can be both meaningful and bring sort of higher returns. But of course, this is not the case, because on one side, there is a lot of perception of risks in these types of investment in developing countries. There is a significant market barrier. There are also not only investment risk, but also regulatory and policy risks. And at the same time, they can bring potentially attractive returns. So what needs to be done is the public finance, international climate finance, but also international development finance. And when we say development finance, these are the World Banks, ADBs, and other sort of even bilateral aid, but also philanthropies. They had to enter to de-risk the investment into developing countries, to entice that money and capital sitting in developed countries by de-risking, giving some grants, giving more sort of concession, sort of blending in some of the concessional finance, so that private sector can also be enticed and brave enough to go and invest in developing countries. And that's actually what is being also recently talked about with the, for example, the major sort of what's called Bridge Town Initiative. You may have heard of this recently, but there is a major call for a change for multilateral development banks to take more risks. They don't have to have just AAAs, they take more risks. Now that there are all these global crises that are happening, including climate change, you have to co-invest with private sector, you have to co-invest with philanthropies, you have to co-invest with the public sector in developing countries, so that you blend in this highly concessional capital, whether it's grant. We also, for example, with GCF, we also invest what's called first anchor equity, first loss anchor equity. There are green guarantees. When you say first loss anchor equity, it basically means I invest with you, but if there is a loss in that project, I take up that loss if it goes bankrupt. But that's okay, because we want very quickly to help countries to leapfrog to greener investments, right? So how do we make sure that $1 of public money, but also philanthropic capital, moves and shifts $10 of private finance? Because just relying on public sector money, just relying on international development money, and even philanthropic money is not enough, is not sufficient to move, to make the major shifts and make the major systemic shifts. So that's why everybody has to get involved, whether it's private sector, whether it's national government, whether it's internationally, but that's where also justice comes in, where developed countries have to chip in much more than before. When I say the negative yielding capital, of course, pension funds, institutional investors, insurance companies, sovereign wealth funds, and asset managers. So they're also expressing strong interest in investing in sustainable assets, but they're deterred by perceived risks associated with green infrastructure in developing countries. And that's why there is the call for fundamental changes in the way the financial system works. Now let me try to move to the next slide quickly. Again, this is a technical slide. I'm not going to dwell on this too much, but I'm happy to share with the students what are the perceived risks and how they can be de-risked and how they can be sort of helped, whether it's regulatory, whether it's technological, whether it's financial innovation. And if you help, then hopefully that shift. But how do we make sure that with the right interventions in the right places, whether it's policy, whether it's finance, the small public dollar or small changes will bring major shifts in the financial system? And I'll try to go. So these are the instruments that we've been using at GCF, and I think I'm running out of my time, and that's why let me just go very quickly. There's an example, and you spoke about the adaptation, of course. There are some examples of for example, GCF investing with private sector in adaptation, because it's not very obvious that private sector will go into adaptation in developing countries because they don't usually bring that many returns, but there's an example of investing with the US private equity firm Pegasus, co-investing into adaptation for global coral reefs, for sustainable tourism, sustainable fisheries, etc. Let me just very briefly explain. Green Climate Fund, although it's a large multilateral climate finance fund, it's still, we have now assets under management of about 40 billion US dollars, out of which just 10 billion is invested from GCF. Together with co-investments, it's 40 billion US dollars. But if you take 10 billion and divide it, GCF's money, and if you divide into 4 or 5 years that we've been investing since we became operational, it's only at maximum $2 to $3 billion a year. And if you divide it into 100 countries, it's actually not much. So that's why, how do we leverage, how do we make sure that $1 actually can move other dollars as well? So the example of, for example, this Pegasus working with us is we're investing 125 million to entice another 650 to move into investing in a dozen countries into supporting sustainable businesses for coral reefs, for example. And I will maybe just mention very quickly about my country, Mongolia. And one of the projects that GCF funded in Mongolia is to start up a green fund or green bank. So it's called Green Finance Corporation. So very simply, $50 million. If you want to start a new green bank in Mongolia so that they can be more competitive against brown investments, right? So out of 50 million, and again, we're a small country, but population, I thought it's small, 3 million, but of course Bhutan is even smaller. But 50 million, a small, nice sort of, but big enough for Mongolia, a green bank. And it will be very difficult to set up a new green bank in Mongolia, right? It will be, high interest rate. So it will be very difficult. Investors or equity will be also quite costly. But at what, for example, Green Climate Fund does, provides 25 million, half of the 50 million. And out of that 25 million, 6 to 7 million is equity. But it's what's called first loss equity. So I invest so that I entice government to invest. I entice either commercial banks to invest and maybe international, and we'll set up a bank. And that bank invests only in green, and then also reduces risks, reduces interest rates compared to brown or non-environmentally friendly investments. So changing the financial system of the country is also one of the key things that we try to do. We have a nomadic, traditional environmental nomadic herding, what we call pastoralism. And for hundreds and hundreds, if not for 1,000 years, nomadic herders lived what we like to think is a very sustainable way of herding. I like to believe that our nomadic civilization is a green civilization. Just look at the herder. A single sheep will give a family its meat, milk, wool, and its felt. So our yurts, or we call sort of nomadic gears, are made of felt. The felt will be used to make the felt lining of the nomad's yurt, but also warm winter shoe. I see very beautiful, actually, shoes that you are wearing, but our traditionals will be felt shoes. And we can, the herders even make good use of all animal dung by burning them for heating their yurts. And then we build the walls of the animal winter shelters by dung as well. And they're creating a floor of dung to keep them warm. So from cradle to grave, the herder focuses on every part of the animal to make sure that everything gets used. Basically, it's a very recycled, very sort of nature-friendly civilization. And of course, in Bhutan as well, traditional ways of life in our countries like Bhutan and Mongolia are very sustainable and circular. There is so much to preserve, learn, and reintroduce from our traditional ways of life. So I would like to finish just calling all of us, cherishing our traditional wisdom, but also sharing this knowledge with others. We have to be proud that our way is a very sustainable way, and there is a lot to learn from our traditional fathers and grandfathers and mothers as well. Thank you very much for your attention.